Good evening, ABR-MarketWatch viewers. Today saw U.S. stocks slip, reflecting anticipation for an action-packed week ahead, filled with economic data and geopolitical events. The S&P 500 dipped by 0.1%, the Dow Jones fell around 150 points, and the Nasdaq 100 edged down 0.08%. However, this minor retreat comes after last week's impressive gains, where the tech-heavy index notched consecutive record closes. Investors are keeping a keen eye on upcoming inflation figures, July's CPI on Tuesday and PPI on Thursday. These critical numbers will influence the Fed's September rate decision, with a high probability of a rate cut suggested by market sentiment. Meanwhile, trade tensions continue to simmer, with President Trump extending a 90-day tariff pause for Chinese goods and confirming a deal that requires Nvidia and AMD to hand over 15% of AI chip sales revenue to China. However, gold imports were exempted from tariffs, easing Swiss bar concerns. Tech stocks showed a mixed performance today. Intel rose due to the CEO's planned White House visit, Micron increased after improving its earnings outlook, but Apple declined 1.4% following a strong week. In spite of this cautious mood, the markets remain optimistic about a potential rate cut and the ongoing tech sector performance. Today, the S&P 500 index dipped by 0.25%, closing at 6,373.45, the fourth highest close in history and the largest one-day point and percentage decline since August 5, 2025. Despite this setback, the index is still up by 10.21% from its election day close on November 5, 2024. This dip follows a steady rise in the S&P 500 index since tariffs were announced in April 2025, with a current increase of 12.39%. However, it fell slightly over the past two trading days and is now 0.26% off its all-time high reached on July 28, 2025. Despite these recent fluctuations, the S&P 500 has seen a significant recovery since April 2025, with a 27.91% increase from its 52-week low and a 19.26% rise from a year ago. In conclusion, while the S&P 500 index saw a minor dip today, it remains at a historically high level, up by 8.36% year-to-date. This trend, driven in part by the tariff announcements, suggests a generally robust market performance despite recent fluctuations. Stay tuned for more updates as we navigate this dynamic market week.